Hey there, future investors. Want to know which investment could secure your financial future? Bonds or real estate? Stick around because today we're diving deep into the classic showdown between these two asset classes. And trust me, you won't want to miss this. Picture this. You have a chunk of cash saved up and you're ready to invest. But should you go for the stability of bonds or the potential growth of real estate? The answer isn't as simple as you might think. Let's break it down. First, let's talk about bonds. Think of bonds like a safe harbor during a storm. When you buy a bond, you're essentially lending your money to a government or corporation in exchange for periodic interest payments and a return of your principal at maturity. They tend to be lower risk, which can mean lower returns, typically in the range of 2% to 6% annually, depending on the type of bond. This makes them a solid choice for conservative investors or those nearing retirement who want to preserve their capital. Now let's switch gears to real estate. Imagine real estate as a high-speed train, potentially thrilling, but it can also come with some serious bumps along the way. When you invest in real estate, you're purchasing property either to rent it out for ongoing income or to flip it for a profit. Historically, real estate has appreciated at about 3% to 5% annually, but that can vary widely depending on the market. Plus, real estate investments come with additional expenses like maintenance, property taxes, and management fees, which can eat into your profits. So, which one is right for you? Here's where it gets personal. Consider your risk tolerance. If you're someone who prefers to play it safe and enjoy predictable returns, bonds might be your best bet. But if you're excited by the potential for high returns and are comfortable with some risk, real estate could be more up your alley. Next, think about your time horizon. Bonds are typically better for shorter investment horizons. If you need to access your money soon, bonds can provide that liquidity. On the other hand, real estate is generally a long-term investment. If you're willing to hold on to a property for several years, you could see substantial appreciation and income from rental properties. Let's put this into perspective with a relatable example. Imagine you invested $10,000 in a bond with a 5% interest rate. Over 5 years, you'd earn $2,500 just sitting back and relaxing. Now, if you put that same $10,000 into a rental property, you might earn $1,200 a year in rent. Over 5 years, that's $6,000 in income. But don't forget, real estate could also appreciate in value, potentially doubling your investment if the market conditions are right. Now, let's talk about financial goals. If you're looking for consistent income with less hassle, bonds can provide that steady stream without much management. However, if you're aiming for wealth building and don't mind getting your hands dirty, whether that's renovating properties or dealing with tenants, real estate might be the way to go. Now, before you make your choice, consider this. Diversifying is key. You don't have to pick just one. Many successful investors combine both bonds and real estate to create a balanced portfolio that mitigates risk while aiming for growth. So, what's the big takeaway? Bonds can provide safety and steady income, making them great for conservative investors. Real estate, on the other hand, offers potential for higher returns and can be an excellent long-term investment. But be prepared for the commitment it requires. Are you team bonds or team real estate? Drop a comment below and let us know which path you're considering. And don't forget to like and subscribe for more insights that can help you navigate your investment journey. Next time, we're covering an investment option that's often overlooked but could be a game changer for your portfolio. Don't miss it.